I think overall sense है कि Nifty has made a new high, so 23,400 is on the card. So further acceleration is what we would expect in the markets. गुड पार्ट इज कि आपका जो बीएफएसआई सेगमेंट में कुछ जो स्टॉक्स थे वो परफॉर्म नहीं कर रहे थे, तो नाउ यू हैव स्टार्टेड सीइंग परफॉर्मेंस फ्रॉम देम. And mind you, BFSI is a big segment. One third of your Nifty is contributed by BFSI, so that is so that way markets are heading towards further high. And I think globally markets have been soft, so that way I think our markets have done relatively a lot more better. Market breadth also has been pretty good. I think the only challenge is that the crude is inching up a bit because of geopolitical concerns. So some commodities like aluminum and copper are also up. But that bodes well for especially the metal as a pack, because metal is one segment which has not really performed. But to sum it up, I think overall sense is that markets are headed towards new high. Whatever correction we have seen in the last few trading sessions have been sort of recouped in a very short span of time. Vishu, I can't hear you.
Right. I'm so sorry, I was on mute, sir. Sir, I think another event slash non-event was the RBI monetary policy. So what happened there, sir?
Actually, nothing happened, Vishu. So it was largely a non-event for the markets, I think, and was expected also. So one is there was no rate cut expectation. So this is the seventh time RBI in their meeting has not done to sort of change any of their rates. So their repo rate is same. Their forecast for GDP is same for next year at 7%. The inflation forecast is at 4.5%. And I think when you look at the market reaction, both stock side and even on the debt side, there was hardly any reaction. So 10-year yield hardly moved. So from that perspective, it was largely a non-event. But sometimes no negative news is good news. So that way, I think that is how we are going to take, because overall the expectation is that the rate cut will happen somewhere in the toward the second half, especially in the month of October. So I think those expectations are sort of intact. And I think overall sense is that if the GDP is going to grow at 7%, the nominal GDP growth rate could be 11.5%. So what key takeaway for banks is that they can easily deliver 12 to 14% kind of a nominal or a credit growth. So that way, I think the biggest sector, the outlook remains sort of intact. And I think whenever the rate cuts happen, that is when we will see probably things getting better for BFSI. I think one good thing has been that in December, we have been talking about liquidity in a deficit. Now it is turned into surplus. So that is a minor positive. But nothing happened in the policy, or nothing negative also.
Right, sir. Sir, I think what market is probably looking forward to now is the result season, which is just around the corner. I think IT, banking, and banking have been the most watched out spaces so far. So what can we expect there?
So in IT, overall, the sentiments are still muted, because see what happened after Accenture commentary is that a recovery is expected towards late FY25. Now, coming to results specific, most of your tier one companies might deliver negative 1% to 1.2% kind of a quarter-on-quarter growth. TCS might do at 1.2%, whereas something like HCL Tech might deliver, or Infosys might sort of do a negative growth of 1%. And I think tier two could be slightly better. So something like Coforge could deliver 1.5% kind of a growth. But again, you will have companies like Tech Mahindra or LTI Mindtree, wherein you will see a decline of about 1.5%. So no major revenue growth is expected. I think some bit of a margin improvement can happen because utilization is going up. The attrition levels have been sort of coming down. So that is the only marginal positive. I think the key thing to watch out will be the kind of commentary what they give, especially for a key market like US or big spenders like BFSI or the retail sector. I think coming to company specific, see, Infosys had got a good amount of tax refund, net tax refund of 4,000 odd crores. So it would be interesting to see what is it that they do with that kind of money. Typically, IT companies don't retain too much money, so they are one of good dividend payout masters. So that is what is an expectation. And Tech Mahindra, overall, our sense is that ideally should give up a plan for FY25. So that is a long due which is expected from.
Right, right. And so how about I think जो banking sector के initial sector updates आने लगे हैं, the results are yet to be out, but they have started giving out the feelers, I think.
Correct. So business updates, if you look at, I think the key positive or big positive surprise has been the HDFC Bank. I mean, HDFC Bank, there were two, three problems. One is the deposit growth was weak. Now, this particular quarter, the deposit growth has been pretty good at 7.5% quarter on quarter, and growth being driven by CASA. The other was that on the lending side, they were doing more of a wholesale lending. So that portion has sort of declined because in wholesale lending, your margin profile or the spreads are not that high, unlike retail. So that way they have done the peaking in terms of recovery of margins. So overall sense is that you will see some margin recovery for this. So one of the concerns for HDFC is sort of getting addressed partially. I think rest of the other banks, if you look at IndusInd Bank, while the growth has been good, I think overall pressure on the margin is expected because deposit growth has been sort of a bit slower. Federal Bank also came out with decent set of numbers, so about 18-19% kind of a both growth in top in the advances and as well as in the deposit side. I think Bajaj Finance, while the growth looked good at 34%, but the challenge is that the number of customers added during the quarter, those have sort of declined. So not a very great sign. So which is why we have seen some softness in Bajaj Finance. Otherwise, some of the other banks like CSB Bank is sort of doing well. L&T Finance, they have completely retailized their book. So 94% of their book is a retail. So no major red flag there. I think the positive surprise was definitely HDFC Bank, and we have seen HDFC Bank really sort of doing about inching up 150 to 180 rupees in the last 2-3 trading sessions.
Right, perfect, sir. HDFC Bank owners, I think they're happy after a long while now. They've been waiting for this moment to say yes.
Absolutely.
Right. So next up, I think March ke auto volumes also came up. Is auto sector also a contributor to the lifetime highs that we are seeing in our markets?
Absolutely. I think auto as a sector has been quite resilient, has been sort of doing quite better and in bits and pieces. So earlier you had Tata Motors and M&M, which were doing well. Now the two-wheeler as a pack has been sort of doing well in terms of price performance. In between, Maruti also has been sort of chipping in. But when you sort of look at the March wholesale numbers, numbers were sort of a mixed bag. As I think what came out good was the PV volume. So on the PV side, Maruti did about 11% kind of a growth. Tata Motors about 14% growth, and M&M continues to sort of do well because SUV portfolio for them has been growing in double digits. So their overall volumes grew by 13 odd percent. I think two-wheelers were a bit soft. Hero MotoCorp, mid-single digit kind of a decline. I think TVS is one company which continues to sort of outperform their peers in a significant way. So their volumes were up 12%. I think Eicher Motor is more or less sort of steady. So numbers are not really inching up. So that is a bit of a dampener. And Bajaj Auto continues to sort of do well because earlier their export volumes, plus rural volumes had got impacted. I think tractors continue to remain subdued because of the higher base. So we see double-digit decline in both M&M as well as Escorts. And CV has seen a sort of a decline, but CV again follows. So one should not really sort of measure CV sales in a monthly format. But overall sense is that two-wheeler players are giving a better commentary, especially on the rural side. And I think PV continues to sort of do well, especially the SUV portfolio. So I think overall numbers have been quite good for the auto for this entire year of FY24.
Right, sir. Before we get to the final part of the day, there are some live audience questions. So one is KG sir is with us. He has asked Mayur Unicotex quotas, are we still tracking? He has a position there and he's good to hold as long as ICICI Direct is tracking?
So, yes, we do track the company. We continue to track. I think whatever export traction we were expecting from the company as guided by the company, that has yet not been coming, because overall, the expectation was that in this artificial leather business, since you take a good amount of time to sort of empanel customers, especially the MNCs, the volume growth is was expected, but I think last 1 or 2 quarters the numbers have yet not been picking up, and which has been which is expected to be the key driver. And our sense is that hopefully this quarter we should see those numbers. But in case if we are not getting those numbers, then we will have to revisit our bullish bias on the stock, because that export business was expected to contribute meaningfully, and it's a high margin business. So if something is not or something is breaking there, then I think probably we'll have to revisit. I think this quarter number would be a crucial from that perspective.
Right. Thank you so for that, sir. Then Satish sir had a product specific query, so we'll try to get back to you on that. KG sir is thanking for guidance on HG Infra. You're most welcome, and thank you, research team. Next we have any good suggestions, sir? हम लोग के tracking तो होती है, and coming to any good stock natural scenes creation ने पूछा है, तो sir, coming to the final aspect, your weekly hidden gem.
So I keep covering stocks in the hidden gem largely from the perspective that whatever is looking good to us and whatever can be sort of bought across sectors and dimensions. So I think this time around what I'm recommending is hospitals. I think typically for hospitals, Q3 is a softer quarter because that is the time when festive season are there. A lot of elective surgeries do not happen, or people postpone that. So Q4 is generally a better quarter, and Shalibi is one company which is largely into sort of elective surgery. So especially if you look at the knee and hip replacement, which is the biggest segment for them. So about 45% of their revenues come from them. Although they are sort of diversifying into multi-specialty categories. The other thing is that what we are liking about this company is that medical devices is a field which is going to get a lot more bigger, and this company has gotten into implant business. So basically, they are into knee and hip implant business through their US-based subsidiary, which is called Consensus. This company was making losses, but now it has turned a bit positive. So our overall sense is that next few years the numbers of this company are going to look better. So top line could grow at about 14%. We will see a lot more better growth on the bottom line front, about 27% growth, because the margin profile would improve from say 17% to 21%. And ROCs will improve to 16%. And valuation wise, this is quite attractive at 13 times overall. Because our sense is that when you look at the tier 1 players, they are sort of, there is a significant discount between tier 1 and tier 2 players. And we like hospital from the perspective that it's a better business to be, it's a compulsory consumption compared to the FMCG, where you have a lot more discretionary consumption. And this is one field which has got multiple levers. One, you have the benefit of higher insurance penetration, which can help. Then, because of better technologies, your RPOP can go up because you really do not need too much of a hospital or a bedding as a space to sort of do business. And then obviously you have other business, other segments which are going to sort of chip in. And so from that perspective, I think this is one segment or one sector which can deliver double-digit growth for a decent period of time. So Shalby is one of them, and with a target price of 320. I think you are on mute.
Right. So once again, thank you so much, sir, for joining in. This was our weekly wrap. Thank you, audience, for joining in. Thank you so much, Pankaj Pandey, sir, for taking out time for us.
Thank you, Vishnu. Thanks.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.